Yeah, I think for most investors, they're just concerned about the next year or two versus the next 5 to 10 years. So I think people are, rightfully so, trying to figure out, are we going to head into a recession or not, or are we just seeing a little bit of a plateauing of demand? And then, like you mentioned before, we're in a pretty big shortage for semis here. Most companies I spoke with last week, I met with both investors and companies. Most companies I spoke with are already booked out for this year and booking into next year. So they were saying, hey, if there's a little bit of a relief in demand, it would actually be a good thing, just since there's so many shortages out there.
Yeah, but we're at this moment, Chris, aren't we, where not only are there challenges on the manufacturer side, but the nature of what's being designed and demanded is shifting as well. There's so much demand for customization from the hyperscalers, right, on the data center side. And then there's so much shifting even on the client side in PCs. We see Apple leading with the M1 chips and others moving into more heterogeneous computing. So should investors really think differently than short term about those trends? Because where we end up, even before those 5 to 10 years out, is probably going to be pretty different.
Yeah, that's a good question and a good point. I think that this is more an extension of the trends that we've seen over the last decade plus, where many of the new designs, let's just say a majority of the new designs, are going to foundry. And then, like you mentioned, a lot of that foundry is done out of Taiwan. Samsung is also emerging as a foundry power, and then we've seen all these moves that Intel is trying to do to become a foundry as well. But really, this is just what we've been seeing for the last 10, 15 years, where the majority of growth manufacturing-wise is on foundry versus integrated companies. So I wouldn't say that this is anything new.
Yeah, so Chris, let's talk about that a little bit. You spoke to investors who said that they were bullish on Intel because it serves as a hedge against a Chinese takeover of Taiwan. Of course, it does have that more attractive valuation. But when you talk about their foundry plans, those are still some years out. And even the investment that it's doing kind of pales in comparison, while it is big, to a TSMC.
Yeah, exactly. So they mentioned Intel and Global Foundry. Global Foundry is actually the largest U.S.-based foundry. Now, that's mostly trailing edge, but clearly that's a hedge as well. I think on the Intel front, we've been on record for many years. Remember, Intel has had a foundry sort of effort for the last 10 or 15 years, and it really hasn't gotten off the ground for a variety of reasons. Number one, right now, they're behind the leader, Taiwan Semi, in terms of manufacturing. So in our opinion, they need to get that fixed first and foremost before trying to become a foundry. But then number two, the foundry business model and the foundry servicing is totally different from microprocessors, right? So Intel pretty much controls the standards that go on in microprocessors and PCs versus the foundry, which is a much more, hey, Mr. and Mrs. Customer, what do you like? I will go ahead and make it for you. So that's a big change. I think bottom line is they need some foundry people to run that business versus Intel people.
Got it. Chris, thank you. Chris Danley.